Everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May the 6th. Wanted to take some time and just talk about what we saw in the markets last week, what we've seen so far this week, and where we kind of see markets moving from here. We have seen the S&P 500 last week. We saw it finish the week exactly flat on the week. So not up, not down, exactly flat for the week. However, we did see some underperformance out of small caps and mid caps, which have been leading the markets forward this year so far. But they're still well ahead year to date, but they did finish the week a little bit negative with the S&P 400, which is your mid cap stocks, down 90 basis points or 0.9%. And you saw your small caps down about 0.4% last week. But again, continued outperformance year to date over the large caps, which is the S&P 500. And as we've come into this week so far, one of the things that we've really seen is some real underperformance this week out of the growth names. And as we continue to get earnings in, even though the earnings are really, really good, we continue to see a lot of these large cap growth names or mid cap growth names get sold off 2, 3, 4% on their earnings reports and in their transcripts. And so one of the things that we have to think about as investors is what's causing this. Why are the growth stocks selling off? Well, we can think about over the last decade or so, if not longer than that, we have been in a deflationary environment. When we're in deflationary environments, your growth stocks are going to outperform your cyclical stocks that are going to be more interest rate sensitive and more inflation sensitive. They do better in high inflation markets. They do better in higher interest rate markets, that being your cyclicals and your more value oriented names. Well, where we stand today, and if you listen to if you listen to the earnings calls, one of the things that we're hearing of is that inflation is here. The costs of goods are going up. The costs of services and shipping goods and moving goods throughout are going up. Inflation is here. We do not know yet if it's transitory or if it is a long-term trend, but it's here and it's real. And so that's why investors are selling out of these growth names and buying into the cyclical names. So you will have seen the NASDAQ down most of the week this week, but the Dow has been positive most days this week and has continued to outperform. And as we're talking right now, the Dow is sitting right near all-time highs, with the NASDAQ well below all-time highs in the marketplace. So as interest rates rise, as inflation is here, what is going to happen is at some point the Fed is going to have to act and raise interest rates. And investors are always thinking out long-term, big picture, 9, 12, 18 months from now. So even though the Fed has signaled that, hey, we're not going to raise interest rates in 2021, and we plan to keep them at 0 till 2023, that's the plan. But investors are saying, well, if inflation is really here and it runs hot, and as we get more and more employment data like we got today with strong jobs reports, and as employment comes back, the Fed is going to have to act and raise interest rates. As interest rates rise, those stocks that have high PE multiples are sold off to buy your names that have lower PE multiples and are more cyclically oriented. That's just how the market moves. So if you're positioned more towards growth, that's probably what you're seeing in your portfolio, is a little bit of underperformance of the S&P 500. And to put things into perspective, year to date, the value sector of the S&P 500 is up over 15%, while the growth sector is lagging behind at half of that, at about 7.25% year to date numbers. So again, that's what we're seeing. We're seeing the value outperform. We're seeing your more cyclically oriented names outperform. So if you have questions about how this is going to impact your individual portfolio, or how to strategize and plan yourself out for the next 9 to 12 months or the next couple of years, feel free to reach out and give us a call. We're easy to talk to. We love to talk about it, and it's what we're here for. So give us a call at 904-346-3460, or as always, catch us online at www.riverplacecapital.com. I hope everybody has a wonderful day, and stay steady, my friends. Thanks.